All right. Hi there, guys. A very good afternoon, good morning to some. We've got quite a number of people attending the webinar for tonight's session. But the thing is that sometimes it's a bit difficult, I understand, with regards to timing from across the world. So hence the reason it is better for me to do one webinar, especially like right now in the morning, and then have it dispersed, the recording of it to everyone. So that would actually be an easier thing. But for those who are attending live, I want to thank you for your time attending live. And the benefits of attending live is you could trade, on the spot and basically ask me questions on the spot as well with regards to live movements and live events or risk events that are happening at this moment of time. So without further ado, let's get to the market and look at what's going on. But firstly and foremost, today is the 7th of May already, and you are into the Bretton Financial Trading Academy market wrap-up that happens on a Friday or every Friday. So we've got 3 webinars per week, and we've got the Mondays one, the Wednesdays midweek. Mondays is the week ahead review, and then we have got the Fridays one that we look into trading opportunities, of course, trade ideas, trade signals, but most importantly, to wrap up the market, look at what has actually happened and look at where we could troubleshoot what has already happened and prepare yourselves for the next week. Okay, so with regards to heat maps, just very quickly to look at what's going on, what has been going on in the market, both in Asian sessions and European sessions on currencies, on currency pairs especially. We could see it straight away that it is a very quiet moving type market in the Asian session because of all these very short bars. They're not really long bars that is tilted to one side, whether it is buying or selling. It's been, a little bit of a mix, and the bars are quite short. So we can say that the Asian session has been quite quiet. It's got to do with maybe holidays. We've got the Ramadan still going on as well. We've got activities that has been a little bit slowed down with the current third wave of the pandemic, COVID-19. So that's not being very good at all at this moment of time. So there's been a bit of a difference between what has been announced as a COVID emergency in different states or in different countries or continents than when it is actually being announced as a global pandemic. Now it's been announced as a global pandemic again for the third wave. So this has actually a very big impact on how gold and the US dollar would actually move. So this is what I would like to inform traders out there, because this is a very, very important piece of information that has actually changed a lot of correlation in the market, mainly when it has got to do with safe havens. Now, traditionally, what usually happens is that you have got the fear factor or any crisis that happened would actually flow in all these buying positions into safe havens. Safe havens are your USD as well, your CHF. US dollar is a safe haven too. CHF, which is your Swiss franc, and your Japanese yen, as well as gold. So you've got this very, very popular 4 types of safe havens that usually has got a very big flow of buyers when crisis happen. But it does actually depend nowadays what has actually happened the last 1-2 years actually, when the COVID started, when there has been the pandemic in Asia, for example, and even in the US, or specifically in the UK and Europe, then we see that the US dollar goes up because it becomes a safe haven. Right now, this is specifically when it happens. This kind of crisis happen in Europe and GBP, in Great Britain or in the UK. Then you've got this flow of USD turning to become a safe haven when this happen in these regions. But when there is a global pandemic, right now there's a global pandemic, then USD is still a safe haven, but not to that extent anymore. Then what takes over to become a stronger safe haven will become gold again. So hence the reason you are seeing gold going up. So you need to differentiate between COVID-19 is becoming a very big factor in the movement of US dollar and gold, because US dollar and gold, they are tied up. So whatever happens in the US and how USD moves would actually impact gold a lot. And whatever happens in US in terms of the yields, their treasury bills and everything else, economy as well, and its relationship with China as well, all that impacts gold. Okay, so I'm going to be doing a special masterclass in gold very soon. It's an online course, certified online course, so that traders could actually really understand how do you actually trade gold online, what do you need to understand, and also how could you also invest in physical gold. I mean, there's always a good balance to understand these things as well. Okay, so this is a very, very important piece of information for you guys, traders out there, especially retail Forex traders like myself. Now, so this is where you need to differentiate between whether it is a global pandemic. If it's a global pandemic and it's been announced globally and it's a bigger scale pandemic covering the whole world, then you are looking at the possibility of gold going up. Okay, so but if you're looking at it at a smaller scale in specific continents, countries, let's say Europe or UK especially, then you are looking at USD going up as a safe haven and then gold going down. All right, so this is what we want to really be careful about. So now, in terms of currencies, we see that we have got a bit of a flow in GBP pairs today, as you can see on the Asian session, though not yet in the European session, or not yet in the UK session, maybe a little bit early as well for the UK session. But what I can see that may be an opportunity for today, Friday, the 7th of May, is NZD related pairs and also Australian dollar, because we've got a bit of a flow of NZD crosses and also AUD, not too bad, but usually they mirror each other. So it may be a little bit slow on the AUD, not as active and big as the New Zealand pairs, but then they have some correlation. So this is where I would like to focus on are actually the NZD pairs as of today on Friday. Then we can actually take a look at them and see whether or not we've got some trading opportunities, especially intraday ones. We wouldn't want any long-term trades that go over the weekend as well, just so that we can mitigate some risks and not to increase our risk, but to increase our probability of success for the next week, because we don't want any hold up of trades as of today, Friday, and then go over the weekend and then experience a very risky gap of the market next week. Because if that happens, then it might pull down your chances or opportunities for riding a very good trend. Perhaps next week it would be a very volatile, maybe liquid week as well. So you don't want to miss any opportunity. So you want to really plan how you're trading and what sort of trades you are holding for the weekend. And it's better not to actually hold any trades. So to clear them off, cut your losses early as well, and look at the level of risk as well that you are going to be going through for every trades as of today, Friday. Okay, so that's NZD. Let's just very quickly go on to one of the websites that I use. I mean, DailyFX is also it's part of IG. It used to be part of another very big broker, FXCM, in the past, but then IG bought over the DailyFX. DailyFX been running really long as well. I've got very good friends who are market analysts there in DailyFX, and they are all mostly based in the US, some based in Singapore and Hong Kong as well. So we share a lot of views together, and sometimes before they publish some of these news, and then we talk about it as well, and then they have it published. So I see that the standard and the quality of news that they've published, especially in this section here, has got quite good pointers for us to just look at the headline right here and then to just get an idea of the trends in the market, especially breaking news that might be of interest to us and also might actually form some trend or reverse some trend or maybe hold them to consolidate. There are many other areas. So on the news right here, you can see you've got AUD USD gains may extend on China's PMI. So here itself gives you a nice hint of a correlation between Australia and China. So when there's gains there in Australia or even the Australian dollar versus the USD, that's mainly because of positive news, positive data, especially on the manufacturing end for China. So whenever you find very high impact news on manufacturing in China, especially, then if it is positive, it would actually impact positively the Australian dollar as well as a whole, and also Australia, because they are the biggest and greatest trading partner between Australia and China. So China buys most of the minerals. I would say more than 80% of the minerals and everything that it needs to manufacture its stuff in China for the export back to Australia or to the whole world. So the majority of that minerals is actually being processed and is being created for finished goods in China and then export it back to Australia as well. And Australia is their biggest trading partner in that sense for the import and export side of things. Okay, so this is actually quite interesting, and it also says after discounting the Australia-China tension. So do we need to really know about its tensions and all that? Not really. The headline is good enough for now because you don't want to waste time reading and getting lost into analysis, which is over analysis, is paralysis at times. We don't want to get into that. So if you really want to read that, you read it in your spare time or maybe right after you place your trades and all that, and you are okay with all your trades being placed after you've made all that decisions, then you can have your personal reading time analysis. But try not getting into reading reports and reading news too much within your time of trading or before you actually place your trades and have all that settled. You need to settle all your trades first, and then you can have your research time. I do my personal research on the weekends and also off my trading time as well. So that's very important for you guys to understand. So oh, testing 1 2 3. Is it okay now, the sound? Let me just make sure that I go into the settings. Settings seems okay. Testing 1 2 3. Maybe I went away from the microphone. Is that better now? Testing 1 2 3. Still soft. Perhaps we want to check with the others as well. Is it just Aaron, or we've got the others that are experiencing the same thing? Let me just check. It's on the loudest as well on here. I don't see anything on at my end though. Could we confirm with the rest? You guys are hearing me okay, loud and clear, or you guys are experiencing the same thing as Aaron? Testing 1 2 3. Testing 1 2 3. Testing. Okay. All right. I have checked as well, but I'm not sure. Let me just check. Sometimes what could actually happen is maybe it's at your end, but then the recording would actually be okay because it's been recorded at my end. So yeah, let's check, because I've checked at my end. There is, let me see. Perhaps microphone, same system. Everything seems all right at this end. Testing 1, 2, 3, testing. I'm putting it as loud as I can. Testing 1, testing 1, 2, 3. Okay, perfect. All right, yeah, let's continue on that one. Okay, good. So this is it for Australia. So there is a hint of Australian dollar versus the USD to actually have some gain. So I'm just going to write that down as some hints based on news as well. But we want to go back to the Action Forex heat map as well, just to take a look at which pairs are actually being traded the most during Asian session, as well as the upcoming European UK session, as well as the US session. So US dollar outlook, USD CAD volatility to rise. So we want to also look at USD CAD because they're talking about volatility to rise. We just want to take a look and not to just follow the headlines and straight away click onto the buy or sell button. We don't make any decisions at this stage. We are just looking at the market, doing a little bit of a market analysis. Okay, so we've got Bitcoin price forecast, BTC battles resistance. So what that means is BTC is battling resistance. So there may be a reversal, upcoming reversal that is expected. So that is for Bitcoin, BTC. So I'm just writing this as a bit of a hint, but nothing, no decisions are going to be made until I get onto the chart and I do our own or my own analysis on the trend, and also to lay out all the patterns and everything else that comes with it. Okay, so that is it for that. And if we go on to, got a section here that comes under, we've got real-time news there, but this is another one is sentiments right here, which is quite a nice tool to actually have. This one here is a very interesting tool that is called the sentiment analysis. It's a, how do I say this? It's usually the opposite works. So what happens is that if you've got 66% on the net short, that actually means that it is on a buy at the moment, mainly because it's a reversing. So this is a different approach of using the tool. Here, for example, you've got gold on a 76%. So that basically means that there may be a chance of gold reversing at the moment because there's too much already buying on the 76%. So it's too much bulls out there. So then it's probably time for a reversal potentially, but we can actually take a look at that and see what's going on. But before that, before going on to the chart, let's get to looking at top 10 movers in Action Forex right there. Just want to get into it again, just to look at what are the focus of traders and investors out there with regards to pairs. Now, as you can see, you've got lots of concentration on AUD. You've got AUD, you've got GBP as well. GBP mainly for the first two, especially based on the daily chart right there. You can see that USD CAD has got 4 dots there, which basically means that its trend is quite clear across 4 time frames, from 4-hour right up to the monthly chart. So I want to look at USD CAD as well, is because when we were on the daily FX news, they did talk about USD CAD volatility to go up. So that volatility is always the lifeblood of the Forex market. And then you see that you have got it quite clear in terms of an uptrend, because the change right here as well is showing that most people, because of the positive sign right there, if it's positive, that means majority of traders and investors at the time are actually buying the base currency, which is buying the USD. So because they're buying the USD, then it's a positive right here. If it's negative, that means they are selling the base currency. So here we can see that most of the AUD pairs, most traders are actually selling the AUD, and they are actually buying the USD. So here USD CAD, you've got a buy there. We don't have further USD pairs except for the AUD USD, but we do have CAD here, CAD here, We've got another CAD here. So CAD looks like it's on the downside at the moment. Mainly, it is matching with the news about USD CAD volatility going up as well. So it's more on the buy side for USD. So my guess is it may actually be triggering some correction in gold as well to the downside, but we'll take a look at that further in a bit. So I want to pay a lot of attention to USD CAD. Also, if we go on to the FX Street economic calendar, just to check on what's going on today. Of course, today is one of the most important data will actually be released on NFP. So ADP, I would guess it has actually been a little positive. So let's take a look at that. That was on Wednesday. So Wednesday, this is Friday. Let's just go up a little bit. Yeah. On this week, to the 7th. To the 7th, apply that. Okay, so on Wednesday was the ADP, and usually it's on a Wednesday that you get the automated what do you call that employment report, and that's called the ADP, and that comes out on a Wednesday before Friday's NFP. So here, as we go on to the USD, you see it's on ADP, it's right here. It shows a little it says there's 742 800 565. Okay, I think it looks like it's positive, but I'm not sure why it's got a red number there. Usually it's green if it is actually positive. So what we can do is US ADP employment, and that's, I think that was 7650, yeah, 5th May 2021. Go into the news. So here itself, it gives you a hint that the US economy regains more private jobs. That's positive. And then US private firms added 742,000 jobs. So that was indeed a positive number. So this is giving us hints that the USD CAD will be on the rise, that USD in general will be on the rise, and then we may be looking at a bit of a correction for gold to be on the downside. So gold on the downside, USD most probably on the upside, but then we want to search for the right pair to actually trade on before we go any further. Okay, so here, this is for Wednesday, so that's good. That's good confirmation. As of today, Friday the 7th, we had this is basically coming out. It's from the Australian National Bank on monetary policy statement, which is a high impact news. So that would actually impact Australia. So on the news itself, on the daily FX, we have found that AUD USD was the first news that they talked about, and that might actually marry in very well with the volatility that may be created by the RBA monetary policy statement. So we want to take a look at AUD USD as well, USD CAD for sure. And then if we go further down, we've got definitely the USD crosses would be very nice to trade today, including the majors. So we want to look at Euro USD mainly because of the NFP. So NFP traders, they like to trade USD JPY, they like to trade Euro USD, GBP USD as well, even AUD USD, depending on what they are trading on. So the major pairs meaning the pairs that have got USD in it would actually be good to actually look at today. Okay, so that's one. And we have got CAD as well, which is good. We've got employment figures and also net change in employment for Canada. So that is actually going to impact Canada quite a lot. So we want to look at that, whether or not that would be a direct negative, and then whatever you get in NFP will be a direct positive for the USD. Then we've got a marathon of trend. If you've got you've got two opposite trend direction caused by two different things, then it could actually be quite good to actually ride along the USD CAD trend. But if you've got the Canadian as well really strong and then the dollar as well really strong, then we might get a little bit of confusion in the market. So maybe more on a shorter term trade as opposed to a longer marathon to look forward to. Okay. All right, there you go. So now that's all out of the chart, and I think we can proceed in looking to the chart. But just before that, we just haven't really looked into the currency map at the Action Forex just to get a bit more idea on pairs. So we can see that most of the currencies here, if we go into the 4-hour, shorter term, I would think, you've got loads of bearishness of other currencies as opposed to the AUD. AUD is looked at as being really bearish in the shorter term. But then when we go on to the daily chart, then it starts to pick up, I think, because we want to look at it as all the pairs here are looked at as bearish against the CAD, for example, in the longer term chart. So we've got a bit of a nice trend here to look at for CAD, but let's get to each pair and look at it specifically on each pair. So here, for example, we have got, let's say CHF, you've got CHF being really bullish against the euro in general, and it looks like it might pick up to be dark blue here as well at some point maybe, but we've got majority of dark blues here, which basically means CHF are really bullish against the euro. So that is another pair to look at, is euro versus CHF. So you've got euro, CHF. So CHF being bullish, so the euro CHF would actually be a bearish pair. So because you'll be selling the euro most probably and buying the CHF. And this is also got to do with the current pandemic and the current situation with COVID as well. And that might be giving more interest to safe haven. So CHF is one of those safe havens. So there you go. Okay. All right, let's take a look at the chart this moment of time. Perhaps we can start with gold first, just because it's actually been quite good in terms of its bullishness. I've laid out since last week some take profit area for a buy, and you've got several take profits right here. The first take profit, you could actually start buying, let's say as of now, and if you're already buying, then you can actually take a look at 1823.60, let's say, or even 1823.10 or something like that to actually exit for your first TP. So you've got several TPs right here, and the first one is your 1823.61. Then you've got the other one at 1837.03. So right after you've actually closed that trade, and if the right after you've closed the trade for your buy at 1823 level, let's say, then you want to buy again, and you can actually easily get into the market again at 1825, let's say, and just to be safe, a couple of dollars above the 1823 area, and then you re-enter, buy again, and then you take profit at the 1837 or just before 1837. Then you close your trade again, and basically you look at how the market goes up and up. If it does actually goes up and up, then you are having all these ones here as your probable or possible take profit levels. Okay, so you want to close one trade, take your first TP, enter again, and keep entering and riding the marathon. Hopefully it's a marathon of an upward type trend, because we've talked a little bit about it on gold as of last week, couple of weeks ago, and we have laid out this green area or green box. This green box is actually a bullish zone, and that bullish zone has been fueled by this mother candle right here, as you can see. So I've actually lined up that zone based on the opening price of that mother candle and the closing price of that mother candle as well. So if we, and that's the weekly chart, if we were to zoom out as well and go onto a monthly chart, let's say, you can see that you've got several mother candles. You've got a really big one right there to back it up on this one here. So we are just based on this one here first before we take it further, and we want to trade it in sort of a consistent system whereby we want to enter the trade for a buy with gold in relation to what's going on in the market as well, because it is fueling the interest in gold as a safe haven now because of the global pandemic third wave in many countries. They might be announcing a lot of close downs as well as of next week and maybe middle end of next week as well. So this is now going into a global scale, and that global scale will then now fuel the push on the upside for gold. And coincidentally, when we look at it in a technical perspective, it is going into that bullish zone as well, fueled by or supported by some major bullish candles to the left, which basically gives us the idea that these are areas that investors and traders in the past definitely like to buy in this area, or have actually bought in this area before. So they might repeat that process of buying again in this zone. So location is everything as well. And the location of a buy zone is actually right now at this moment of time for gold, as what we can actually see on the technical charts. And it's been fueled by what's going on in the fundamentals side of things, and news and risk and everything else. So out of the chart is fueling what's in the chart at the moment in terms of technical setups as well. Okay, so there you go. So this is for gold. It's looking good, and I've laid out, as I've mentioned, all these prices that you can actually TP, and I like to take it layer by layer, and you close your trade for the first TP, and then you go on to the next one, to the next one. So this is where it's really important, and really important for us to actually know that we need to be careful and not get overly excited with the buy positions of gold as well, mainly because right now we are actually looking at it from a technical perspective, yes, fueled by the fundamentals, but we need to realize we're looking at it from a major time frame as well, like the weekly chart. Of course, you've got all these little what do you call that, not little, but significant reversals. But when these significant reversals happen as well, might impact smaller traders, retail traders out there. So hence the reason I want to lay it out in terms of shorter trading opportunities, and you want to enter, take profit one, take profit two, later on enter again, re-enter a couple of times to get all your TPs until it reaches roughly that level there. So that would actually be a better way, or a better method or approach in trading for every level, whether you are short-term, intraday, and all that, so that you get an idea that this big opportunity could be layered down in order to reduce the risk for you when reversals actually happen. Okay, I hope that makes sense. Any questions, you guys are free to just ask. Okay, all right. So with that, this is for gold so far. We want to take a look at USD CAD, which basically screams out some opportunities to actually trade. That's for USD CHF. That's for oil. That's actually done very well. Okay, so USD CHF on the, now I'm just looking at the weekly chart straight away. It is actually, it has actually gone down a lot on USD CAD. The question is whether or not it's bound for a reversal. Now, I don't usually start to just look at it in the weekly chart, or I rigidly look at one time frame to look at. No, I just look at what's there, and I like to use my intuition as well sometimes to actually trade or analyze the market based on high time frame first or short term first. It doesn't really matter as long as you go from short term to high and a high term time frame or vice versa. But you need to go through them, not look at only one time frame, just to get a bit of an idea. So from the weekly chart of USD CAD, it looks like there may be a reversal coming quite soon. Maybe, probably. Why? Because as it moves downwards like this, to the left, it's got some very significant support, but following the current price is at 1.2173. So that price itself, it has gone under the 2180 psychological number, but then at this area here, it's quite a significant quite a significant support that may hint reversal, because that support area has brought prices all the way up about 2000 plus pips up. Of course, it took some time, but that actually started, let's say you want to take that candle there, that was 2017 onwards, and that has been a steady price increase all the way to the top, and that actually happened there. So that happened from 2017 right to 2020 March. So March 2020 last year, it began to actually fall and depreciate further. So this created a sort of upward move and then a fall all the way. But that is quite a significant increase, you see. So now it's actually approaching that same support area there. And with the news that's going on out there as well, it looks like it may actually fuel a support. So you want to be very, very careful that we'll just take all these lines away for now. And if we look at it only on the weekly chart based on this area, let's say based on this opening price of the mother candle itself was at 2174, which is really close to 2180 psychological level. If we take the low side of it, it's, let me just use this. It's at 2049, which is just one pip away from the 2050 psychological number. And if we take this opening price right here of that mother candle there, is at 2011. So the 2011 is just it's about 9 pips away from the 20 psychological number. So as we can see, all these support area here, you've got 1, 2, 3, which are all very close to the current price right now, are all very, very close to psychological numbers. So this is going to tell us that there is a possibility of a reversal. So you want to be very careful with your selling orders at this moment of time for USD CAD. So there may be a potential of an upward move. So now what we do is that if we pick one time frame to actually take a look at, then we can always retrack and go back now to looking at it as a story of trend. So here, for example, if I were to look at it from the 1 hour chart, I look at it being downtrend bias. We've got all these 3 lines of 50 EMA, your 100 EMA, and your 200 EMA. They're all actually really smoothly flowing to the downside. And you've got all the candles, majority of the candles, current candles especially, are below the 3 lines. So that is signaling a downward movement, but only on your 1 hour chart. So what you need to then do is look at your 1 hour and marry that with your 4 hour and look at whether or not it creates the same story. Now here, it created the same story and it's got this significant downward type bias at this moment of time between 1 hour and 4 hour chart. Then we marry that to the daily chart and see whether or not we get the same story again. So here, it looks like the angle is still strongish, not bad, but then the 3 lines is definitely signaling more downtrend. So we have got your 1 hour, your 4 hour, and your daily. Overall, it is signaling a downtrend. So it's very, very downtrend bias. As we go on to weekly chart, then you can see you could actually then see clearly or clearer, mainly because it's got more data in there. When you were at the 1 hour, 4 hour daily chart, you may not be able to see the closeness of the price at this moment of time to some support level. So then I would be very careful in I'll be using the weekly chart right now, because it's the weekly chart that I can actually see what's going on clearly, which is a possibility or probability of a reversal. Why? Because on the left we've got this resistance at this moment of time. So what I will do then is, because the current price is on this support area, I will then mark it based on this lowest body as well as the lowest wick. So that will become my support zone, not support line, but support zone. Then what happens next is I try to be more sensitive with price movements on each one peak that I can, not peak, but each one valley or support or even low that I can actually see here. So on this one here, the buy price started to open on this candle here, that so I want to also factor that price in. So I've laid out that yellow line there based on the opening price of that mother candle right there. So then I look at this peak right here. The upward type movement didn't really start until it opened priced on that one there. So I would lay out that as well. Now, as I have laid out that support line right there, coincidentally, it also marked the wick of this candle right here. Then I would like to factor that in as well. So now I have got some lines based on the weekly chart to give me that whole zone where it, to me, it is sort of a contemplation zone, which basically means that it's better to think about your entry when price is in this zone rather than to make that entry, because making that entry or that decision to actually trade when price is in within this zone right here, it may actually be quite risky. So that this is based on a weekly chart. So from the top box right there to the bottom of that box, that's about 300 pips worth of uncertainty at this moment of time. So it might actually cost you 300 pips in risk as well if we were to take that trade. So at this moment of time, it's probably best to actually lay low a little bit. But for those who wants to go into trading today for USD CAD on a shorter term, it is still possible on the downside, on the downward move, because we still have got very clear downward type trend to the downside. So you can actually still do short-term trade based on your 4-hour chart. So here, for example, you would need to do your short-term trade on the downward, on the sell only after the fall of price, obviously. So now it's correcting a little bit even on shorter time frame. So you want to sell at the high. So once it's actually gone to a level that you think you can actually enter, then you do that sell. But still, it is quite a risky type move, but it is still a probable, possible type of trade, anti-trending the trade, basically. Yeah, so it's still possible for the shorter term. Now, let's see. Okay, daily chart. Let's see. Okay, we've got that reversal even happening in the daily chart right there. As we go like that, in my opinion, we've got some selling possibly once it starts to come down. If it does start to come down, you've got a little bit of selling, but the selling may actually sort of give you the opportunity to make roughly from the current price to this area right here, perhaps about 40 to 60 pips, but I would think maybe to take about 30 pips or so, it's possible for the downside for USD CAD, not really for the upside. Now, for the upside, we've got tremendous opportunities, I think, mainly because of how the bullish candles are actually moving upwards. You've got sizes, you've got relevant sizes to the left as well of bullish candles. And I think that would actually provide more buying opportunities than selling opportunities for USD CAD. Okay, so also CAD may be influenced by the price of oil, and price of oil is actually dropping at this moment of time. So it is a commodity currency, and it's actually very much impacted and connected to the price movement of oil. So here, as we can see, we were buying oil at some point starting 2 weeks ago, if I'm not mistaken. We've already taken profit at the D point of this pattern, buying oil, and now it is actually just reversing from the D point to the downside, and we may be looking at ABCD to the downside right now, which basically supports the current position for Canadian dollar on the downside. So when that oil going down or is going down, it would influence the downside for the Canadian dollar, and with the USD CAD, it's sort of confirming the trend that the USD CAD would be on the upside because of the appreciation of USD compared to Canadian dollar. And Canadian dollar is impacted by oil, so it's actually on the downside. So when we correlate that way, I think we could find some buying opportunities upon reversal for the USD CAD. Okay, all right. Okay, guys, so that's basically it. So far, we've covered the USD CAD, we've covered gold, we've seen through oil a little bit. So we're going on to AUD USD right now, and just to look at what's going on with AUD USD. Now, with AUD USD, is rather interesting. It has actually been caught up at the moment. I mean, just based on the daily chart itself, it has been blocked to go up further, mainly because of this green zone right here that seems to be quite strong in its resistance. Okay, so this is a resistant type level that has been touched many times with wicks and the closing of each body of candles and all that, and you can see that it continues to be quite a popular area for resistance right there. So it goes back, I think, even further back, you can actually see more and more powerful resistance. So that area right there, let me just go back. That area from, let's see, from the 7828 area right down to the 7797 area, that is basically a zone that I've marked as quite significant in terms of resistance. So that is probably going to pull the AUD USD down further, especially when we have talked about potential of USD going up, mainly because of its fundamental factors. They've created 700,000 over jobs, and everything was positive with the ADP. So if at all it's going to fuel the NFP today and make it more positive, then we can see further fall of the AUD USD, and that would then justify that strength of that resistant area to pull down price a lot more. And if it does actually happen in pulling down price a lot for AUD USD, especially on the fundamental side, let's say NFP really positive, USD keeps going up, then the AUD USD, we could see it falling, following and mirroring this mother candle right here. So this is quite a good opportunity area right down here. Okay, so once it has been fueled by fundamentals, especially on the US side of it, especially because it's NFP non-farm payroll day today, and if that is really positive, that could actually be fueling the strength of the US dollar, and then it would break out the price to the downside for AUD. So then AUD would actually come down here. As it comes down, it would actually be fueled by all these mother candles, bearish mother candles right here. So we've got some power. We've got some power candles here to pull down the price for AUD USD once it breaks out from here. Then you can take it in stages and mirror the mother candles. But once it actually gone down even lower under the 7750s area, or maybe under the 77.50 and under the 77.20s area, then it could probably create more opportunities for you to actually under the 77.50 area especially. So once price have actually gone lower and lower, a breakout from that green zone that I've actually drawn and reached the 77.40s area, I would guess it's got loads of opportunity to go right down to this area here at 76.20s area. So you've got about 100 pips or so, 100 or even 100 plus pips opportunity, but it's probably best for us to take it in stages and, you know, enter and re-enter again and look at all these support area as well. So if you're entering at 77.40, let's say pending order, you could do a pending order 77.40, you want to exit roughly at this stage, at this area, before 76.90. So before the, perhaps at 77.10, you can actually exit, because if you're entering there 77.40, then you exit 77.10, that's 30 pips to take. So you're taking 30 pips at a time, 30 to 40 pips at a time. You re-enter again as the market moves on, and you basically just ride the trend that way, just so that you could sort of absorb the risk of reversals much better, or be prepared for reversals much better when you take that in stages as well, while you ride along the market and you observe the market to be stronger and stronger to the downside for AUD USD, and stronger to the upside for the USD process as well. Okay. All right, guys, I think we've covered a little bit for AUD USD. I think I've still got about 7 minutes or so. So what I'll do is probably will just scan through a little bit on the market. I just want to remind traders of CHF-JPY, which actually performed really, really nicely. We've got the CHF-JPY traded since 1.5 weeks ago. So about 2-3 weeks ago, I have begun to draw out this pattern, the bullish ABCD pattern for CHF-JPY, and the price was just trading at that time at this area here at 118.57, and then it managed to break through the 118.77 area. Then I sort of realized that it may actually be able to go right up and hit the TP. So we've got 4 TPs that has been planned for CHF-JPY from weeks ago. And here, for example, we are looking at buying. We bought at our first entry at 119.10. We took profit at 119.40. That was the first TP, and that got hit for a 30 pips profit. And then we re-entered. We did a pending again at 119.60. Then we took profit at 119.90. That was a 30 pips profit. That was your second TP hit. And then we had the re-entry again for the third time at 120. This was just recently got hit your third TP. So we bought at 120.10 and we took profit at 120.30 area. So I think that was only about 20 pips if I'm not mistaken. So yeah, no, sorry, that was actually buying at 120.10 and take profit 120.40. So again, another 30 pips. So I've laid out that we've got the last entry at the moment, which is at 120.60. That hasn't actually been hit yet, or hasn't been triggered yet, sorry. So we've got the fourth TP still on, and it's still on the table for entry at 120.60, and you're taking profit at 120.90. Okay, so that's basically it. We've analyzed this pair quite nicely. I've looked at the AB equals CD area at 86 candles. So usually we've got 86 candles as well there. It took A to B about 20 days. So this is actually reaching, I think it's the 15th day. We've got another couple of days for it as well. So we've analyzed it that way. And we see it's still a possibility of hitting that 30 pips there, entry at 120.60 and take profit at 120.90. So the total pips generated from this trade itself for hitting all the 3 TPs so far was 90 pips. So we've got 120 pips in total to expect from this giant ABCD geometric pattern. So we have got another 30 pips to go. So congratulations to those who have actually gone into this trade and been patient with this trade as well, because it did take some time. It took about 2 weeks or so, of course, for the initial A to B. So that was the time frame as well expected for this trade. But you know, if you're trading on a pending order, you've set up your pending order and you've monitored the trend and you've attended the webinars with me, we've been monitoring this on each webinar as well, then you'll be guided to trade in a more stress-free environment, because you don't really need to monitor this trade every single day as well, every single hour. You just basically monitor the movements in terms of the fuel that will be fueling. Maybe it's fundamentals, maybe, you know, it's anything that we will be discussing on webinars as well on this. So CHF JPY has been really nice, really good. A nice pair to also trade with its volatility. Now, volatility, again, I would remind you, is the lifeblood of the Forex market. But again, with volatility comes opportunity. With both volatility and opportunities comes also risk. So we need to balance all that, because it all comes in the same coin for all these three elements. So we want to know, how do we actually trade it in stages, as I have done so here. So we are taking smaller pips, but then we let the market ride on onto the catalyst of the market that has caused this upward type movement. But we just want to monitor for any major changes. As you can see, you know, we didn't actually have a very big sort of reversal or being thrown back by the market for any of these one pair movements. So it's been nice. But one of the factors that have actually contributed to the success of this pattern is also the trend monitoring from different time frames, and also looking at scaling all these sections of trading opportunities using candles and price action to the left has been very, very powerful, and has been very, very interesting to actually look at how it has actually worked for more than 10 years now for me in this way of trading. So this is what I've been sharing to my community of traders. So I would like to share that with you guys as well. Just to remind you guys that we'll be launching at Bretton Financial Trading Academy, we'll be launching our subscription, and that would include a course, and that's only for $10.99 per month, and you will get short videos for how do you actually trade the geometric pattern. So it'll be a geometric patterns course that is a prerequisite for the actual certification course that will be internationally recognized as well. So you can always, pay for the subscription, but it includes the whole course, and it's a prerequisite for your geometric trading method certification course by the London Institute of Traders and Investors, called ATI. So yeah, we've got a lot upcoming for you guys as well. So you guys can actually learn the pattern, but also get certified in the entire course and trade plan as well, coming soon. All right, guys, I think that's all I have for you guys. It's 10 o'clock now here in Limassol, Cyprus. So I would like to wish you guys to have a great weekend, relax and clear your mind, enjoy your time with family, very, very important, and your loved ones, and leave trading aside for the weekend. You can do some light reading and join me on Monday's webinar. So that would actually be a nice plan of action for you guys to trade with me and with the community geometrically. All right, guys, take care, and thank you for joining my webinar today, and have a great weekend. Bye-bye.